Are you planning to buy a new car and confused about whether to buy, lease, or finance it? Welcome to a journey of discovery where we'll explore the three main routes to car ownership. Today, we're breaking down the pros and cons of buying outright, leasing, and financing a new car. This isn't just about getting behind the wheel, it's about understanding the financial implications of each choice. So buckle up, because knowledge is power. Stay tuned as we dive deeper into each option to help you make an informed decision. First, we delve into the option of buying a new car outright. When you buy a car, you're taking ownership of a physical asset. This means you hold the title, and the car is yours to keep or sell as you see fit. This is one of the main advantages of buying a car, the sense of ownership and the freedom that comes with it. Another plus to buying a car outright is that there are no mileage restrictions. You can drive as much or as little as you like without worrying about incurring extra fees. This is great for those of you who love long road trips or have a lengthy daily commute. Then there's the freedom to customize your vehicle. Want a new paint job? Go for it. Looking to upgrade your sound system? No problem. When you own the car, you're free to make it truly yours. But, as with any financial decision, there are also some downsides to consider. One of the main drawbacks of buying a car outright is the high upfront cost. Not everyone has the lump sum necessary to purchase a new car, and this can be a significant barrier. Next, there's depreciation. The moment you drive a new car off the lot, it begins to lose value. In fact, it's not uncommon for a car to lose 20 to 30% of its value in the first year alone. So, while you do own the car, it's an asset that's likely decreasing in value over time. Lastly, when you own a car, you're solely responsible for its maintenance. While this does give you control, it also means that any repairs or upkeep costs come directly out of your pocket. So there you have it. Buying a new car outright can offer a sense of ownership and freedom, but it also comes with high upfront costs, depreciation, and the responsibility of maintenance. Weigh these factors carefully when considering whether to buy a new car. Scene script. Next, let's explore the option of leasing a new car. Now, leasing is a unique way of acquiring a vehicle that may seem a bit like renting, but in reality, it's a bit more nuanced. You're essentially paying for the depreciation of the car over the term of your lease, which often results in lower monthly payments compared to buying or financing. This can make leasing an attractive option if you're looking to drive a newer, more expensive car without breaking the bank each month. Additionally, leasing can also be a great option if you like to switch up your ride every few years. With most leases lasting 2 to 4 years, it's a fantastic way to always be driving a car with the latest technology and features. Plus, most leases come with a warranty that covers the majority of repair costs, adding an extra layer of financial security. However, as with any financial decision, leasing isn't without its drawbacks. One of the biggest considerations is mileage limits. When you lease, you agree to a certain number of miles you can drive per year. Going over this limit can result in hefty fees, so if you're someone with a long commute or who loves road trips, leasing might not be the best fit. Furthermore, at the end of the lease, you don't own the car. You've essentially been renting it. And while you do have the option to buy it, you might end up paying more in the long run than if you had chosen to buy or finance from the get-go. Finally, be aware of potential extra costs at the end of the lease. This could be anything from excess wear and tear charges to fees for not maintaining the car according to the manufacturer's recommendations. Keep these points in mind if you're considering leasing your next car. It's all about balancing the pros and cons and deciding what fits best with your lifestyle, budget, and driving habits. Lastly, we'll look at the option of financing a new car. When you finance a car, you're essentially taking out a loan to purchase the vehicle, which you'll then pay back over a set period of time. This can be a great option for many people, and there are several reasons why. Firstly, financing allows you to spread out the cost of your new car over time. Instead of having to pay the full amount up front, you can make smaller, more manageable monthly payments. This can be particularly helpful if you don't have a large amount of savings or if you prefer to keep your cash flow flexible. Secondly, financing a car gives you the possibility of ownership at the end of your payment term. Once you've made all your payments, the car is yours to keep. This can be a compelling advantage over leasing, where you'll need to return the car at the end of the lease term. Thirdly, financing a car can help build your credit. Each on-time payment you make is reported to the credit bureaus, which can help improve your credit score over time. However, like everything else in life, financing a car also has its drawbacks. One of the main disadvantages is the interest costs. Depending on your credit score and the length of your loan, you could end up paying a significant amount of interest over the course of your loan. Additionally, financing a car can sometimes require higher insurance coverage. Lenders often require comprehensive and collision coverage to protect their investment, which can result in higher insurance premiums for you. Lastly, financing a car is a long-term commitment. Most auto loans last between 4 to 6 years, and during that time you're obligated to make your monthly payments. If your financial situation changes during that period, it could put you in a difficult position. These are the factors to consider if you're thinking about financing your new car. In summary, each method of acquiring a new car has its own set of advantages and disadvantages. Buying a car gives you ownership and freedom, while leasing provides flexibility and often lower monthly payments. Financing, on the other hand, can be a happy medium, allowing you to eventually own the car without the upfront cost. Remember, the best choice depends on your personal situation, preferences, and financial circumstances. Thanks for watching, and we hope this video has helped guide your decision.